Okay, the chart that we're looking at right now, this chart is a follow-up to the blog posting from yesterday, and several of you wrote me some very nice letters thanking me, and I'm very glad that you made all those pips yesterday from following my analysis. It makes me very feel good. Makes me feel very good when I get letters like that and see that people are really making money from my advice. And trust me, it makes me happy whether you've acquired the Charts and Men books or not. Um, but we're going to start from where we left off yesterday on the last post. And I told you to get out at the close of this bar here because we were at resistance and just had a breakout, but we had lower volume and I didn't trust it. And I also mentioned to you that price would probably stall here, and that I wanted you to get out, not necessarily because price would not reach our eventual target, which is up here, the green 23% fib line. I advise you to watch and see what happened at this point at the prior high, the breakout point, and to decide if we were going to get back in and ride the trade back up to here. But most of the letters I got from those who ended up profiting all the way up to here, they never exited the trade. They got in right around here at the 52 level where I suggested, and even though I suggested getting out here, for the most part, most of them they stuck it out and stayed in, and eventually price did move up to our projected target here. So now let's jump ahead to the next bar, the close of the next bar after our exit bar. This was the bar that I suggested that we exit on, and this is the close of the next bar, the subsequent bar. Now at the close of this bar, what is this bar telling us? If you have LCM and the Archimedes principle, you know exactly what this bar is telling us. This bar is telling us, first of all, that even though it went down, it's still displaying strength because it went down on lower volume. It's also telling us that it tested the very next footstep below support and bounced back up with a lower volume. Although the negative is that we closed below the prior high right here. So as far as timing, that tells us that the market is not ready to move up, to resume the move up again. But as far as setups and signals, the setup is still telling us that this market still wants to go up, because guess what? If it's not what it was, it is now what it wasn't. Make sense? But it right now it is still what it was, meaning that it was strong. It is still strong. So the bias is still up, but the timing says not now. Now let me clarify what I mean when I say that if the market is not what it was, it is now what it wasn't. And see, when we have our breakout bar here, we want to see higher volume on any type of breakout of support and resistance. There are some cases when this does not apply, but this case it does. So the market is strong here, and now even though we finished up and we broke above a resistance, the market is no longer strong. By virtue of this lower volume, the market is no longer strong at the close of this bar. And what's the opposite of strong? Weak. If it's not strong, it's weak. With our next bar here, okay, it does not confirm weakness. Okay, it confirms strength. So right now we have a balance. Right now we have a boat that's sitting on top of the water. We have a flotation device that's floating on top of the water. So now what we want to see is a follow through of strength before we want to re-enter and try to ride the market up to our projected target up here at 23% fib. Now let's jump ahead to the next bar, the subsequent bar, which is this bar here. Now after the close of this bar, what is the market telling us? Well, once again, we have lower volume. We're still closing below the prior high here, but that lower volume, and when we look down to our MFI, the last two bars, and actually the last three bars, we see that there's a very little participation in the price movement. So even though these two bars are down, they are displaying strength. And when we look at the next bar here, we can see that it closed inside the range of the prior bar. So it did not make a lower low on the close, and it did not make a higher high. So this is pretty much a floating bar. So right now we still have a boat that is floating on top of the water here. And so we were strong, we became weak, but the weakness has not been confirmed. So what's going on here is that the big players, they're waiting for something, and so we should be waiting too. Although we feel that price is going to go ahead and go up, our risk is still down. As long as we're down below this high here, our risk is still down. So now we had a breakout, we had a pullback. Now we want to see a re-breakout to confirm strength if we're going to re-enter long and try to take the market up to our secondary target that we spoke about yesterday up here at 23.6.